Oh boy, here we go again. FOMC coming in hot tomorrow. Boy, what a wild session today. Markets sell off at the open, and then a miraculous bear trap V-bottom reversal into the close today. So was this nothing more than one fake out breakout into FOMC tomorrow? It certainly might be. But most importantly, though, I have 4 specific trades I'm tracking for Wednesday, and you know how we do it in these videos. I'm going to cover my 4 favorite trades for tomorrow. Then you get a game plan to make some money on FOMC Wednesday. Now, before we jump in and get our hands dirty on these charts, make sure you subscribe to our channel that we don't miss tomorrow night's video. And as always, if you guys like these lessons, if you like these videos, do me a favor here, will you, tonight? Hit that like button for me. Give me a shout out. Give me a holler down in the comment section below. Either way, thank you so much for tuning in and supporting the channel. But enough of the intro, huh? Let's get ready for FOMC Wednesday. Now, starting off as always on the 60-minute time frames on the Nasdaq and the triple Qs and the Emini and the SPY. I like to use the 60-minute charts first to help me plan my trades for the following day. But don't you worry, later on in the video tonight, we're going to drill down to our tick charts. Tick charts make the entry timing a whole lot easier. So we'll put the master plan together on the 60-minute, and we'll drill down and make sure you guys have a roadmap to pick the best entries on FOMC Wednesday. Now, what are the 60-minute charts telling us right now? Well, we are clearly bearish overall on the Nasdaq and the S&P, but is it just me, or did you notice this too? We made that big sell-off this morning, but look where they V-bottom. They close all the way back above those monthly lows, right? We've got September monthly lows. Look at them. They close all the way back up, right, above those monthly lows. If you were to look at this on a daily chart right now, a daily chart would basically be a big red candle, or a red candle with a small body and a big wick at the bottom. So we have a bear market, that's for sure, on the 60-minute, but a very bullish signal coming in to finish off the day today. That tells me that we're bearish, but we definitely still have both of these ranges overhead still acting as a magnet. I think there's still some great reversal opportunities here on the buy side going into FOMC. And of course, with this kind of lazy run going lower, I will talk about how to tell the difference between whether or not we want to short this thing back down again or buy this pop back up. So we have a lot to cover. I want to make sure you guys are ready no matter what happens tomorrow on FOMC. Now, before we jump in though and talk about the specific entries for tomorrow, let's double check the schedule. I know everyone knows what's happening tomorrow, right? Everyone's been waiting on this announcement. You could argue the markets have been waiting on tomorrow's FOMC announcement ever since Labor Day. Now, the mindset on an FOMC day is a lot like the mindset on a Friday. We know that volume is going to drop significantly over lunch. So the goal is to get into trades as early as we can and try to leave a runner potentially into that news. Obviously, we want to make sure we protect our capital, get rid of risk, right? But the goal is early in, and then I'll try to leave a position into lunch, leave a position into the early afternoon, but be very careful getting into positions late in the morning tomorrow. And my mindset is I don't even mess around with the FOMC in the afternoon. I'll save my bullets and come back on Thursday. Thursday is known as Reaction Thursday. A lot better trading on Thursday than trying to force trades on Wednesday afternoon. So early in, you can definitely leave positions open, leave runners into the afternoon if you want to, right? But early in, and again, save those bullets tomorrow afternoon. Usually a lot better trading coming in as markets react to the FOMC on Thursday morning. So save those bullets. Don't be gambling on the FOMC announcement tomorrow afternoon. Now back to our charts, right? Because of course, it's good to know when the news is. It's good to know the mindset for tomorrow, but the money is made on the charts here. Let's now go over my favorite trades here for tomorrow. We'll start off on the E-mini and the SPY. We'll wrap it up tonight on the Nasdaq and the QQQs. Be aware, a lot of these are very similar between the S&P and the Nasdaq. Now, like I mentioned earlier, the S&P is pretty bearish right now. Both the S&P and the Nasdaq on the 60 are pretty bearish, as you can see. But I know I'm not the only person that sees this, right? You can easily see that V bottom off the low, and they conveniently close right back above monthly lows. This leaves the door wide open now for a rotation off the low, back up into that range as we had talked about in last night's video. And of course, I will talk about one easy trick to know whether or not you want to sell this thing back down again, or whether or not we're buying it on the way back higher. So now you know the bigger picture. Let's look at the tick charts here right now. Tick charts, remember, we like to use tick charts in our trade room each morning because tick charts make they make everything easier, really. They make entry timing, though, a whole lot easier. There are really two very important clues on the tick chart that can be used in combination with our 60-minute time frame. The first big clue, which I think is one of the most important clues, is we began the day with that strong run down into a trading range. We then had kind of that low volume pop and grind down. Look what happened. They V bottom off the low, and where do they go? Right back into that trading range. Now, if you're a student of mine, or if you've taken my free trading classes, we look at this now as a bull market into a trading range. With a bull market into a trading range, there are ways to make money with breakouts, breakout pullbacks. There's also ways to make money with bear traps underneath that trading range. That's one very important part of this, right? We're bullish into a range, we're buying bear traps underneath, or we're trading breakout pullbacks up above. The second clue is the strong, it's kind of a combination of two clues. One is the strong move down. Anytime we see a real strong move down like this, we have to expect what? A pullback and a retest of that low. You have to think there'll be a lot of buyers trying to buy off that low as well as sellers trying to short this thing back down to retest the low. You can also see, too, that we are conveniently located right up around the high of this bear channel. So you put those two together, right? Strong run down for the bears, pop up high of that channel. It is easy to see the potential for a roll back down to retest the low. This is where things get more difficult, though, because as we have that kind of conflicting signal here, if you will, that bullish trading range, we know that buyers are looking for longs below that low, but at the same time, though, with that big channel, they may roll over. And when it does, that area is going to be a very critical area for us to know whether or not we're buying or whether or not we're selling. And we'll definitely talk about that here in a moment. So those are the two important clues here on the chart. I want to talk about all the details here. Again, I mentioned 4 different types of trades I'm tracking for tomorrow. Later on in the video, I'm going to cover the breakout pullback. The Nasdaq is setting up almost identical to the S&P. There are ways to buy the breakout, there are ways to sell the pullback, and there are ways to trade the breakout pullback. We'll talk about that a bit later on in the video, so don't go anywhere for now. First of all, though, let's talk about the pullback right now. Okay, this one very easy giveaway once we get down around these lows. Now, in my free trading course, we talk about one specific entry pattern, which is called a failure pattern. It's a very simple idea. In a bull move like this, into a trading range like we're seeing here right now, the goal is to get down to support levels underneath that range. You could easily argue there's a channel coming up like that as well. So easy to see support below it. And the goal is to not try to pick the bottom, right? I'm not a big fan of picking bottoms, especially not in this situation. What I'd like to do, though, is use one of those failure patterns. This will be a slightly more patient or conservative variation of that failure pattern. I'm going to use a 2-try failure, and then once I've got those bears, right? Once those bears are committed off that move going lower, if they fail, again, I'm not trying to pick a bottom or predict this move right now, but if they fail, we can use their stops for an easy squeeze back up into that trading range, take half the profit off at the high of that range, and then remember, the amount we go below the range can project now above the range, and that will give us an easy target for a runner here for tomorrow, right? This is called buying bear traps below that trading range. So one of my favorite trades for tomorrow is piggybacking off of this trading range, trapping the bears in with a 2-try failure, just like you guys are learning in the free trading course. Now, The next question is, what if it rolls over and keeps going? What's going to happen is it will start to look like this. If it pops lower and we pull back and the bears start trying, that's the clue we have a bear failure or a bear trap for the long back up, a failure pattern. If we roll over and we start to grind down like this, usually what happens on these big pullbacks is buyers get caught and the market kind of sells off and it grinds down. If it grinds down like this is when you know it's time to sell that pop and grind channel. It's very easy. Draw a trend line, right? So as it begins to grind down like this, where's the goal? The goal is to retest that low. We're not going to chase it going lower. We mark that low, we tie it up around the high, that creates our channel, and then look left, and I want to make sure we're selling at the high of that channel. Now, my favorite entry pattern is always a bull trap in these scenarios. It could also be a failure pattern, a pullback combination, maybe a strength trade if we have enough space on the way back down to retest that low. Now, keep in mind, I can't go over all of these entry patterns in this video here right now, but I teach all the traps, the failures, the strength trades. I teach everything in our free trading classes. So if you haven't taken that free course yet, if you're one of the few folks watching who haven't learned these tactics, what I'll do is I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that short video series will show you a simple trick that we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. But most importantly, I'll teach you 4 of my favorite entry patterns to use in combination with that roadmap to help you start making money. If you're missing the best trades right now, if you're frustrated with performance, grab that link. That roadmap will make it easy to find more winning trades each day. And I have hundreds of examples in that free video course, such as 2 try failures, if that pops and begins to grind down, looking for those bull traps on the way back down again. And a heads up too, just in case you can't grab that link up there in the upper right hand corner, I'll put all the important links down in the description of the YouTube video. So if you need help, right, all the help will be down there in the description. All right. Now, one more thing I want you to keep in mind here. On the range, right? On the range. Every once in a while, what will happen is you'll get that strong shot down. All right. It won't pop and grind down, which is the easier one. What'll happen is it'll give you a strong shot going lower. If it gives you that strong shot going lower, where do the bears want to go? They want to take out that low. I don't want to chase it. Oftentimes what will happen is the underbelly of this range will then be used for a breakout pullback. Okay, now how would that look? How would I trade a breakout pullback? It'll look a lot like this. If we see that strong run down, okay, what'll happen is we'll now again use the underbelly of that range as the key pullback area. An easy way to do it is to mark a trend line off that low, bring it up around that high, and then wait for the pullback. The pullback will usually get just a little bit above the 21 moving average. This is the 21 EMA, is this yellow line here on the chart. Once we get above the moving average, we could then trap those buyers in as they try to run higher and use their stops to fuel that move back down with a failure pattern. So again, if we see this thing just rifle running lower, promise me you're not going to chase this thing lower, because nobody wants to sell low. They want to sell as high as they can. And so if we have a range, again, channel coming overhead, if they run this thing lower, I'll be looking for that pop and grind. But if we don't get that pop and grind going lower, I'll then shift my focus to use the underbelly of that range with a classic failure pattern above the moving average. If we have enough space, it may be a failure into pullback combination, but as I talk about in the free trading course, we're going to make sure that pullback combination is not too low, right into that low. That is the breakout pullback here going lower. Now, the big question is, if we end up all the way back down at that low, how do we buy off that low? With a bear trap. We trap in sellers off the low, right? So our goal will be, again, either if I don't get that failure for that bear trap there, if it rolls over, Our goal is taking profit at that low. Once we take out that low, now wait for rookies to come in and look for another one of those. One try for the bears, two try for the bears, and then think about where their stops are. Think about where their pain is. Remember, that retest of that low, that is the big objective, right? That is mission accomplished right now for those sellers. We have to assume that anybody who sold on the way down, they should be taking the bulk of their profit off at that low. So, of course, sellers are buyers down here. And then if we see some rookies, we have to assume these are rookies, right? These are not professionals that be selling into those lows. Rookies have small, right? They have small stops. They have small accounts. They can't defend themselves. And a lot of rookies will flip their positions, crazy as it sounds, right? Once they realize that they're wrong. Once we see that nice strong signal now coming off, we then can look for, again, this will be a 2-try failure. The reason, guys, why you want a 2-try here is because momentum will be so bearish. We have to give the bears the benefit of the doubt because tomorrow's FOMC, they may keep on going, right? It may keep on going through that low. Remember, we're not in the business of picking bottoms. I'm in the business of watching bottoms, looking for signs of exhaustion. And if I see signs of exhaustion, I will use those stops to fuel that run going higher. Now, if we do get that fuel running higher, where do you think the market wants to go? You know where it wants to go. It wants to go right back to take out that high. Can I make money on the way higher? You definitely can. You want to look for a bear trap. Okay, these are very classic situations. If you're with us in the trade room or you're taking my free classes, there's a lot of examples of these, right? In that free trading course. Again, we go back to that low, we trap the bears in, right? Even if they went straight down, right? Straight down right into the low, right? Trap the bears in, let them try a couple times, use their stops as fuel to get the reversal. And then as we begin running higher, this is where a bear trap comes in. Okay, bear traps are very, very simple patterns. They're a higher high in price and a trap below that low. Okay, what we always say in our trade room is a strong move higher, a higher high in price, and a trap below that low, right? A strong move higher, like right here. Strong move higher, a higher high in price, and you guessed it, a trap below that low, right? Those are bear traps. So if we do get that bounce off of that low, that double bottom reversal, if we do get it, runs up, don't chase it, try to buy as low as you can. This pattern will pay off for you much more than buying and chasing and going higher. And again, the target is back up to retest that high. All right, so now I think we're prepared for, again, expecting this thing to pull back and trap the bears in for that run back up here. However, if it doesn't, right? If it holds and grinds down, you have a game plan. If it rifles lower and pulls back, you have a game plan. If it runs to that low, you have a game plan. Now we're ready here for tomorrow. The next thing now is what do we do going higher? Right? How do we make money going higher? There's 3 different ways we can trade this if we go higher here for tomorrow. Let's go grab a look at the Nasdaq now. The Nasdaq is very similar to the S&P. We're definitely bearish on the 60-minute. But again, I know I'm not the only person that noticed this, right? We managed to close all the way back above that weekly trading range and that monthly range. It's a whole entire range here for the month. We're now looking at this as possibly a rotation off the low. And of course, that big range we've been talking about for the past 2 weeks, right, is still staring us right in the face here above us. Let's now drill down to our tick charts here because the tick charts, again, are going to make everything easier. This is a 3,000 tick chart. You can see time frames in the upper left-hand corner there, and again, the moving average is the 21 EMA. There are 2 very important clues on the tick chart here for tonight. The first one is the same idea as the S&P. This one is even more pronounced. It's a bullish move up into a trading range. Whenever we have a range-bound market, we know that buyers are looking for ways to bear trap, right, below that low. And we also know buyers would love to get a breakout pullback, which we'll talk about here in a lot more detail here in a moment. One very significant difference on the Nasdaq than the S&P is you'll notice that we had that kind of lunchtime trading range on the Nasdaq. They made that strong run down, right? 3 legs down into, of course, a range. Then we break out. if you are taking my free classes right now, if you're a student in my trade room, or if you've watched a lot of my newsletters over the last few months, you know that anytime we have a range breakout, what likes to happen? A breakout pullback, right? So I would imagine there's a lot of buyers who would love to get that breakout pullback right now. Looking at that on the Nasdaq, it's not that easy to sell short on this market unless we go higher, right? Because we already know now it's a clear bullish range. So as we go lower, right, again, like on the S&P, I'd like to trap those bears in and use stops to fuel this move back up and take out these highs. On the S&P, there's plenty of space to roll lower and get that pop and grind, but not here on the Nasdaq. So I really, it seems like almost like the best possible scenario for the buyers tomorrow would be a strong shot down, trap in some of these bears. Now remember, we're still pretty bearish with that big move down. We're still pretty bearish overall. So even if we get, or I shouldn't say even if we get that strong run down here, I have to respect the momentum of the sellers. And for me, that means don't try to pick the bottom. You can try to pick a bottom, but oftentimes picking bottoms just simply leads to a bunch of losses. What I would rather do is stay patient, wait for the pullback, and wait for those bears to commit. Once I see signs of exhaustion there, then I know where all their pain is, right? Then I know where their stops can get hit to fuel that move going higher. And I love the idea of a 2-try failure to trap the bears in, and then as we make our run back higher, it's that same failure into pullback or failure into trap setup that we love so much in our trade room, right? So failure, and then as we run higher, get that trap going, right? And again, we know where they want to go. We want to take out those highs here in that situation. So not an easy area to sell on the Nasdaq. If it makes its way all the way back to that low, it's kind of the same thing, that 2-try failure pattern we mentioned before. So a little bit different than Nasdaq, but kind of the same basic principles here. Now let's talk about a breakout pullback. Let's talk about breakout pullbacks. Now, you will notice here on the Nasdaq, I don't have it on here right now, but you will definitely notice there is definitely still a large channel here, just like we saw on the S&P. So talking about a breakout pullback, we may only go up. That's a very strong move higher. Anytime we see a strong move in one direction, we expect to pull back and a retest. So be aware, there's no guarantee we go and break out higher. If I take out this high, this is where one of those crown reversal patterns we talked about last night can be very useful here. So what I want to do is, if we break out, I'm looking for basically a trap right on the breakout. But if we can't get that breakout going, if the bulls can't quite get out of second gear here, if they can't get it going higher, if we start seeing these buyers try once and buyers try twice, this is where we look for either a crown reversal. Remember, at this point, we're back to retest the high here. If we keep going, we look for breakout pullbacks. But if the buyers struggle, if they try once, they try twice, and they get that beautiful bull trap, that's the way you sell this thing off the high. You would really try to look for bull traps to sell off the high in any situation, really. If we went higher here and then rammed right back down again, you would think about that bull trap to sell high here. And the reason why you would do that is because you want to, A, trap the buyers in and use their stops to fuel the move down for you. But most importantly, though, you want to sell as high as you can, because who's waiting down here? More buyers, right? It's a range, right? So if you're trying to go against that short-term momentum, at least in my experience, the best way to make money, the consistent way to make money, will be to wait for that bull trap. All right. So again, I'm looking for that breakout, but if we run up and we start to struggle, right, and fail, bam, right, there's your bull trap. Okay, right there. That's the way you short this thing, right, as it goes higher. Now, if we get that breakout, if we do see that strong run going higher, we have to be worried about big time highs overhead. Whenever I'm concerned about buying too high, there's one pattern we like to use, right? And those are trap setups. Remember how it went earlier? Strong move, higher high in price, traps, baby, right? So as we go higher here, remember, we have to see some proof there first. If we can get that strong punch going higher, strong move, higher high in price, that trap pattern, right? That trap's the way you trade, right? You trade the breakout. Now, once we get up inside these areas of resistance, okay, we may not get much further than that. If the buyers come in and they start struggling, bingo, there's your crown reversal on the way back down again. Notice how I draw the crown reversal. It's a lower low in price and a trap high, right? Think about it again. Strong move down, lower lows, trap high. It's the exact same thing, but the opposite direction for a bear trap. This, of course, is a bull trap. So think about this now, right? We run up. We're looking for traps on the way higher to make sure we're buying as low as we can, right? As we run into overhead resistance, are the buyers foolish enough to buy into it? If they are, let them try a couple times because, again, we're still bullish overall. Grab that bull trap, or in this case, the context would be a crown reversal pattern. We'll look for that pullback and go from there. Now, this trading range, right? That trading range is now ripe for a breakout pullback. Got a lot of momentum for the bulls. There'll be big channels coming off that high, off that low. This becomes a very good spot here now to be a buyer. The problem, though, is we have to be careful with this thing potentially rotating all the way down. So rather than trying to pick that bottom, what do? We get below the moving average. We let the bears get short. And what do? We used our stops to fuel this move back up to retest the high. In my trade, when we talk about failure into pullback combinations, you guys will see a lot of examples of those in the free trading course. So think of this dance, right? Think of this dance as we go higher. First of all, we see good proof. We see convincing proof of a breakout going higher here. We then look for bear traps on the way up. We run into overhead resistance. We don't buy into that overhead resistance. We let the rookies do that. Let them try once, let them try twice, lower lows to attract in more buyers, and we get that bull trap for that run back down. Oftentimes that bull trap doesn't get the full reversal because, again, now we get a big channel off the highs, off that low, right? This now becomes key support off the high of that resistance, and we rope in those bears, that failure into pullback combo for that run back up to retest the high. That's the way you trade a range breakout. And in the event that things keep on going, if we were to get, for example, a strong pop and a grind, right? Remember, we have a bunch of ranges on the 60-minute chart. And oftentimes, when you get these kind of fake out breakouts like this, if they roll going higher here, this could easily squeeze and wind up running very strong back up into that trading range. May not happen tomorrow until we get FOMC out of the way, but consider this though, if we do see that strong pop up and they begin to start separating and grinding away from that moving average, that grinding motion, you know this by now. If you watch these videos a lot, you know this by now. Whenever we see those pop and grinds, what do? You mark off that high, you bring it down off that low, right? And you go looking left, you find prior swings. The goal is you want to buy that first test off the low of that channel. It could be a trap pattern. It could be a failure pattern. It's any one of the 4 entry patterns you guys are learning inside the free trading course, right? Anytime the market, right, pops up and begins to grind higher, what do? You mark off those highs, you pin it down at that low, right? And you look to get in right on that first test. It's the same idea if we go higher. All right, guys? So now we have everything covered. We know how to trade this as a fake out breakout off the high, right? Bull traps if it fails. We know how to trade that breakout pullback, both long and short. Now all that matters is a good night's sleep. Let the market play out overnight, and we'll see what we get tomorrow. Remember, tomorrow morning, early in, you can gladly leave a runner, right? Make sure you protect yourself, though, going into the news and save those bullets. Tomorrow afternoon, we'll come back for one of my favorite days of the month, the day after the FOMC announcement on Thursday for Reaction Thursday. All right, hope you learned a lot in the video tonight. Get a good game plan for tomorrow. Now, tomorrow morning, we'll trade this stuff together because the markets are wild right now. I'm sure they're going to throw us some curveballs tomorrow. I'm sure I missed something in the video here tonight. So tomorrow morning, be there with us, 8 o'clock Eastern time in the members trade room. I'll put all of the important links, by the way, for the free classes, for the trade room membership, what I would recommend you do is start with the free classes, right? Learn the basic strategy, get familiar with that. That way you're ready to go with us as a new student. You're warmed up for our members trade room at 8 o'clock Eastern time every morning. If you have questions, if you need help with getting into our free classes or anything along the way, please don't be a stranger. Megan and I are always here to help out. You can call the office or use live chat. We're always here to help. So if you have questions, if you need help, don't be a stranger. Reach out. We'll be here to help out every step of the process. Fantastic job today. A great week so far. Well, a big day coming tomorrow. As always, thank you so much for tuning in tonight. Hopefully I'll see you tomorrow in the trade room at 8 o'clock Eastern time. If not, we're going to come back tomorrow night and get ready for Reaction Thursday. Guys, my name is Joseph once again. Thank you for watching. Be well. Be nice to each other out there tomorrow. And be here next time. Adios, amigos. Bye-bye for now.